Welcome back for our second Q&A session. We have Scott, we have Ken, who just wrapped up, Philippe, and Scott Reese. With that, look, just a reminder, please raise your hand to ask a question. Please wait for the microphone to come around just so the folks on the webcast can hear you. And if possible, please limit to just one question. With that, we have someone in the very far back, right over there.
Hi, thank you. Rob Wertheimer, Aurelius Research. Question is for Scott Reese. Could you just give a bit of a description of the ecosystem of software in grid and electrification? Stage of development, are there natural spots where an OS means it ought to be kind of a unit solution, and not a monopoly, but you know what I mean, like a primary core? Are there dozens or hundreds of different software entities within the ecosystem? Thank you.
Yeah, so we really love the notion of grid orchestration because to us, it explains the evolution of what really needs to happen in the grid. We've had grid assets from a software perspective for decades, and they've played critical roles in helping utilities operate the grid. We're taking those assets, and there are many of them, and leveraging the best of the technologies, move them to the cloud, that will ultimately make up this grid orchestration platform that we've launched. We're also doing some M&A around it to accelerate things. Recently, you saw in August of last year, we acquired a company called Greenbird Technologies. That's because that was a massive accelerant to a key part of grid orchestration, which is bringing the data together from all elements of a utility, giving the utilities for the first time visibility across the grid. So there'll be a lot of different parts that come together as we build it out. I don't know if that got to the heart of the question.
It's really the uniqueness of software for us, because the reality is when you look at our market map and our competitive landscape and a lot of Vernova, you have one or two big competitors. And inside software, what we've learned, my 2 years having the digital business, inside GE, we had many applications that were somewhat duplicative. In some cases, we had let this thing get too big and wide. We've prioritized. But then in the same vein, when we look at the market at large, there's an immense number of technologies that customers are evaluating, but they don't talk to each other. And that's where, for us, grid orchestration of bringing this thing together is uniquely positioning us to serve the market. And Scott mentioned Greenbird. There was another small acquisition we did with Opus One, which is a DERM software. These are small deals. They don't make the headline of the Wall Street Journal. They're not going to. They're really technologies we're acquiring more than businesses that then we bolt on to Grid OS and use our customer reach in a way that we can accelerate how those technologies serve the market much more efficiently than these technologies can on their own. And that's a big, exciting part of what grid software is for us.
Got it. Next question. We'll go to Mark Strauss.
So dating back to the Form 10 filing, I've got a lot of positive feedback from investors on the way that you're breaking out the electrification segment now. I think folks are trying to get a grasp of kind of what that business can look like over time. You know, you look at some of the electrification peers that are out there publicly traded, the EBITDA margins that they might have, let's say high teens, low 20s. Do you think that that's possible for your business, maybe within this kind of by 2028 framework? And can you talk about kind of the tailwinds and headwinds to kind of get something like that?
Philippe, do you want to start with that?
Well, first of all, we went from a business which was not really profitable to something which in 2023 managed to reach the high end or low single digit, or guidance in mid-single digit. But I'm very confident about the fundamentals of the business to go further and to go really rapidly further. After, the universe of electrification players could be a little bit different, depending on the level of automation, robotics you've got compared to the grid particularly. That could change a little bit as well, the multiple. Here we are still in a business where we have this power 2x, but still the grid, which is quite dominant. Typically, we have 2 or 3 players in front of us, where we definitely take the challenge to overtake them in terms of profitability level. That would be our challenge, but it's possible.
You look at the market map that Philippe framed up, and the $75 billion addressable market to 175 is the biggest single market growth factor we see inside Vernova in this period of time, okay? They're also the businesses that have been the most orphaned in some way, to be honest with you, inside GE Company, whether that be some of the assets we acquired from Alstom, and they remained very European-centric. I would tell you, when I took on the grid businesses 2 years ago and visited customers of ours that I have intimate relationships with and talked about what we had in grid, they didn't know. That just is just fundamental to our improvement. Our digital business was out in San Ramon doing its own thing. This business is fully aligned with our purpose every day now to electrify and decarbonize the world, and that focus is driving real improvement. So I would tell you from my lens, the art of the possible for what can come over this decade with electrification has the widest upside case, but it's early, and we want to walk before we run, but I like our chances.
Got it. Next question, right here in the front, please.
Thank you. Mark Bianchi with TD Cowen. Ken, I've got a question for you on the net contract liability. It's approximately $6-7 billion, mostly in the wind business. How much of that is a function of this $4 billion of backlog for offshore? And where should we see that liability go over time? And how much does the cash balance kind of depend on that?
So it will, there is a portion of it related to offshore wind. It is not all related to offshore wind. What I would tell you is that it'll move around a little bit over time. I think if you look back, I know we've just shown you kind of 3 years in the Form 10. That number does move around to some, but I would expect that to kind of continue as we're growing the business to be a measurable cash balance that's sitting there. It's hard to project at any point in time, but it will be a part of the working capital portfolio.
Got it. Next question. Let's go back to Joe Ritchie, please.
Thank you. Scott, you touched on both of my questions actually to some degree, but I want you to elaborate on your right to win in the U.S. because historically, especially in the electrification side, you have been predominantly Europe-centric.
Yes.
And maybe, you've already started to see some of those wins with the backlog growing. You're doubling last year, so any comments around that would be helpful. And then to the other Scott, or maybe, you can answer this question as well. As you're thinking about the software business scaling, and the context that you're giving us mid-single-digit EBITDA margins, it just seems like if you're able to scale this business to $1 billion, that should be super margin accretive to the electrification business as well.
No question. So it's early in the U.S. broadly for electrification, okay? The areas where we're gaining more traction more quickly is in grid software. Scott's ability to gain leverage with the larger utility customers that are really starting to shift from work they would historically depend on their organic teams to do, and now coming to us and saying, it's becoming too complicated, real opportunity. With Philippe, parts of the business that are really moving is the modernization of the aging infrastructure. Think transformers, think switch gears. But that's basic grid enhancements, much more than, as an example, the HVDC growth, as an example, that we're seeing in Europe contribute to a lot of his backlog growth. Very European-centric. Tenant, National Grid, he mentioned. There hasn't been a deal of that magnitude in the U.S. yet. It's to come. It's going to have to, because for us to get to what the U.S. needs, whether it be onshore HVDC projects or offshore, there's a healthy pipeline, but there's not quite as high a conviction case in the US for that to move at the pace that we've seen stuff move in Europe, somewhat driven by Ukraine and the energy security initiative. So for me, where we are in the US broadly, across both of their businesses, it is early, but this is our home field. These are where we have our most intimate customer relationships. And the practical reality in many cases is our greatest home field with some of our greatest customers never fully appreciated how we could serve them. It's the most authentic example of how Vernova, as a purpose-built company, gains leverage across the businesses together. It's early with a lot to follow.
If I may add some
Please.
points.
Please.
We are probably having a deficit of recognition, but we have some strong position in the US as well on the grid solution we have. We take 2 examples. Grid automation. We are number 2 and number 2 worldwide and quite strong as well on the US market. Transformers, through our participation, because we're in joint venture, Product G, we are number 1 in the US. But it is not only known. We are going, it's part of a strategy to push aggressively or breakthrough on the US market by pushing commercially in terms of footprint in order to really gain and rebalance the center of gravity that will be less European, but European and North America.
Yeah.
Very well. Scott, anything?
Yeah, on the point around profitability, without any question, that's one of the things we all love about software is the profitability that it brings along with it. We've worked really hard over the last 2 years to get back to basics, focus in on energy, deliver standardized software, and earn a profit. We're there. That's the start line, not the finish line, right? So we are going to continue to drive both growth and profitability. And ultimately, one of the things that you all have educated me on over the last 2 decades is this rule of 40. That's really what we're in pursuit of, to make sure that our growth and our profitability, when you add them together, is over 40%. And it'll be some balance between growth and profitability between those two. But without any question, we're just getting started.
And his team deserves a little bit of a congrats because of one of the major consulting firms designated your Durham software as the best in the market. So I don't know if that's filtered its way out, but it's a public document. Congrats. Next question, Stephen in the second row here in the blue jacket.
Stephen Bird, Morgan Stanley. I want to say thank you for a great presentation today. AI has come up a lot throughout the course of the morning. What use cases are you most excited about that can, in the long term, really drive the bottom line? There's so many different applications at GE Vernova. I'm trying to think about sort of what are the biggest areas of upside.
I'm going to start, and then I may hand it to you, Scott, if I can. But at the start, again, part of it's just the power gen demand that's coming. Philippe has scope within data centers generally with the electrification of things. You've got to think about the huge install base we have in power generation at large, and how do we service that install base with another level of sophistication on the go-forward basis, including using AI. And then there's many use cases on grid software and where we're going that I'd love to hand to Scott.
Yeah, I'll give you just a pedestrian one, and then we'll get a little bit more complicated. But when a hurricane's coming, we tend to have a snapshot of the vegetation around a utility's grid. We're able to leverage AI to recognize the foliage, and therefore we can determine the growth rate and be able to tell them, hey, here are a few places that we think you should probably get out in the next 2.5 days before the hurricane hits and trim the vegetation to prevent an outage. Because what happens is the tree gets overgrown, the wind blows, knocks down the tree, it takes the line with it. So in the last Hurricane Ida, I think it was, we were able to contact the local utility and say, here are 19 places that our AI says you might want to get somebody out there to trim them. And we prevented 19 outages as a result of that. So, that's a reasonably pedestrian example, but it's a real impactful example. Beyond that, just being able to predict and see all of the demand and availability elements that utilities are just having to navigate today, and being able to better educate them and ultimately just orchestrate that on their behalf. AI plays a massive role in being able to do that, but it all starts with data. If you don't have the data in a way that you can see across the entire landscape, AI doesn't stand a chance. That's why we did the Greenbird acquisition. We expedited, we just launched it last week at Distributech down in Orlando, the GridOS Data Fabric. It's a first of its kind, enabling utilities to see across the entire grid at once.
And Stephen, just one last comparison point to this. I've grown up in the gas business the last 10 years, and with looking at upgrades of the fleet, where we're trying to drive slight efficiency improvements in gas turbines, that we can then quantify the OpEx savings for our customers. But it's hard. I mean, the material sciences of what we're doing is tough for that extra dollar. And for me, what I've learned in the last 2 years of having these electrification businesses is the OpEx that our customers spend on things like like the lines and the transmission, and dealing with that is massive. And frankly, it's easier often to take on savings there than it is the next efficiency upgrade with gas. And it's what gives me so much confidence that there's a lot that we can do to serve our customers in this space.
Let's go to the next question. There's someone in the back right over here.
Thanks, Jack Hurley with Mitsuho. Thanks for the color on margin, guys. We really appreciate it. You talked about how 2024 pricing and margins are mostly locked in existing contracts. I'm wondering if you could tell me how you think about margins locked in for 25, 26, and where we could possibly see some surprise there. Thanks.
Yeah, so at the overall level, what we've said is that about 80% of our revenue in 2024 is locked in through current backlog. That number is about 50% in 2025. And as we move through this year, obviously, we would expect that to move back up. But it kind of runs in those levels.
But when you think about the profit of our services, which is even more the backlog, right? 2/3 services, 1/3 equipment, and that's more profitable. Then if we have visibility to half of our revenue already for next year, it means even a larger proportion of our profit is already secured in that high margin services backlog.
Got it. Next questions. Cliff, we'll come back to you.
Cliff Ransom, Ransom Research. The history of GE is a history of innovation. But in the past, the organization, I won't say often, but frequently enough to make us skeptical, never quite got around to commercializing it or making it profitable. As you look at innovation today, how has this lean culture that you're building impacted what you go after? And why wouldn't that be a perfect application for Hoshin Conry? For that matter, why have I not heard those words or policy deployment even once today?
Well, Cliff, we just have been more using it in the vein of when I talk about protecting for space and oxygen of the teams for the breakthroughs, that's what we're talking to. We haven't used the Hoshin descriptor, but at the end of the day, the way we're running the company today is with a lean operating model with a focus on the critical customer KPIs, but then also with a disciplined approach on Hoshin within the policy framework for the long-term breakthroughs. And for me, this is probably the most powerful part of our operating model today that I would tell you is a real gift I feel like we've received as a company from Larry over the last 5 years. Ambition has never been our challenge inside GE, to be abundantly clear. The challenge has been focus and to complement a distinction between the near-term improvements we must make for our customers while protecting for those long-term breakthroughs and not smothering them before they can come to be. And our business teams are getting better at that. Gas power's farthest along, but there's a long way to go. And that counterbalance between near-term improvements on what the customers care most about while having the discipline to then break that and find a different room, a different audience, and a different leadership style to nurture the long-term breakthroughs in the vein of Hoshin, that's where the magic really comes from. And that's what we're developing. But it's early inside Vernova, and there's a lot to follow.
Next questions, please.
Hi, Vlad Bistricki from Citigroup. Thanks for all the great information today. A lot of focus on innovation, obviously, and there was talk around SMRs, which obviously still very early days on SMRs, but I wanted to ask you, as you think about developing and growing the SMR business over time, how you think about the risk of big cost headwinds or overruns on some of the early projects, and what you can do to avoid some of the expensive lessons that you're experiencing in offshore wind.
Appreciate the question, and this is a big part of Mavi's role every day and what she's leading. But if I speak for her for a moment on this, I would just reinforce that we're also launching the first projects in which our customers that we're delivering those projects are our partners. they're investing in the NPI with us. So this is very much a co-developed solution. And that's not just in the engineering and the technology, but it's also in the risk sharing on how we're launching this product. So we like very much the commercial structure in which our launch customers in multiple countries in the world are our partners simultaneously. That probability weights our chance of keeping this on the highway, in the middle of the highway, substantially. Now, we're not building multiple variants of this. We are building one small modular reactor going back to the workhorse mentality for the world. That is going to drive us down the learning curve. And that's the only way we're building this product. It's what the world needs. Across our portfolio is our ability to industrialize things at scale. And that's what we stand for as a company with SMR, but really in the same way for wind and many other parts of the portfolio. Thank you.
Got it. Next question over here.
Thank you. Deepa Venkateshwar from Bernstein. I'm quite surprised that we haven't discussed the Inflation Reduction Act or the risks. So particularly for the onshore wind business in the US, could you talk about what you see as the risks in case there's a change in administration and they do manage, or what your odds are of maybe repealing the IRA, and what is your, I guess, your fallback plan in case there's any risks to the IRA?
You bet, and I'll hit on it. I mean, I don't think, by no means are we trying to predict elections around here, but I can tell you that we're actively engaging with both sides of the aisle in the US. A lot of the dialogue in those conversations come back to this: jobs, innovation, US competitiveness, energy security. And those generally are agreed upon by both sides of the aisle. You look at what we're doing in Pensacola, Florida right now, where we've invested $50 million to expand the capacity of our nacelle facility in Pensacola, hiring a number of Navy veterans to ramp up our onshore wind business from the naval base nearby. We get support across the aisle for that. And there are a lot of investments in that vein across wind that are supported by most. So those priorities are really what we're positioning the company to serve, irrespective of administration, irrespective of policy, that we believe is foundational to onshore wind becoming the technology that generates 25% of the world's electricity and not 7%. What you see in our financials today, though, to be clear, is we've showed you a fairly flat revenue profile for wind. So we're driving to a much more profitable business with better underwriting, a better mix because of that, and substantial cost out. The real upside case with wind is when we get that volume leverage over the medium long term from things like the IRA. That's not really baked in the near-term financials that we've framed up today.
With that, we have time for one last question.
Mustafa Alkur from Bloomberg Intelligence. I just wanted to ask about your software strategy. Grid OS, very interesting video with Alabama Power and the savings. Do you have like a hardware agnostic approach for your software? Does the software work better with GE hardware? Is it all of the above? Could you give us some color around that, please? Thank you.
Yeah, our customers' environments are very much a heterogeneous environment, so we work with all hardware providers. One of the things you have to love about Vernova, bringing these 12 businesses together as one company, though, is that we do have the ability to integrate in ways that really advantage the customer in a lot of ways. So, Philippe and my team partner very, very closely on the things that matter the most for the customers. Similarly to Mavi's business, our software monitors over 3,000 of the gas turbines that we have in production in real time. So, we're able to continuously improve how our hardware and software interoperate and help one another be better, for the customer. But we are hardware agnostic with our software solutions.